Hi, guys. I'm here. Sorry about this. Had a deadline with Bloomberg. Had to get something out this morning, and apologize for not being here. There's some crazy things going on in the markets, as always, lately. And we're going to just really start out with saying this is another, reason, depending on what kind of time frame you're trading on, to, not have to wake up and be 20 points up or down from the yesterday's close and sleeping with your teddy bear crying, trying to figure out what's going to happen when you wake up in the morning. So again, this is another good example of, not being in trades overnight. I will say that we got right. We talked about 2085 yesterday morning, 2086. And if I can say the word pissed on the air, this literally pissed me off. I got stopped out of the trade. But the good news is we never had a reason to get back in that trade until we got up into that 2102, 2104 area. Now, we talked about not being in trades overnight. So, again, this has kind of been a catch-22. You listen to me on the levels, that 2102, 2104 area, we actually hit, when did we get into this thing here? Hold on. We actually hit a high of 2101.75, so I'm going to call that satisfied. And the China thing coming out is that's such an unknown. I mean, you got to wait for the dust to settle on that to see how things digest that information. But it's a catch-22. Going back to what I said earlier, not being in trades overnight. Okay, if you take that attitude, then you kind of miss the move down. But now this is about turning the wrench the same way. Have a plan. Don't be taken out in a body bag on one trade. Yesterday, I sat there and I was like, well, them's the breaks. 2085 didn't work out. We have, what do we have? In 24 hours, we had a rally from 2062 to 2102. So what is that? 40 points in 24 hours on the S&Ps, and then now we're coming off quite a bit. That's okay. Getting stopped out's a part of the game. See if I can get this chart out of my way here. Getting stops out's a part of the game, and now we're back into this major inflection point down here. So what do you do now? And let me make sure. Okay, so what do you do now? Well, let's just kind of back up for a second. Let's just stay on the S&Ps. Here's our 240s. We kind of, even this morning, as we were, coming off here, we always talk about let's look at things from and again, I'm not looking at things from a very long-term short side. We have been long the past couple of years trying to buy support relative to most of the time our breadth situation being relatively positive. All right. Now, the reason we started changing our tone recently this past year, pretty much all year, we've been, this market's non-directional at best. We've had our breadth on our daily and our weekly get very, very crossed up. There hasn't been any direction, and we've taken the stance, is the leverage really to get long a bunch of instruments and, go to the beach and not worry about it? No, that's not been the case. We've been looking at situations, trying to sell resistance areas with stops. Oh, Lord, what did I do here? Hold on, let me get my signal back up. Ooh. Does everybody still see my chart? Okay. And we've been trying to find reasons to sell resistance and find target areas like we did this past week on the 2060 area to try to take some weight off and then kind of wait and see what happens. And we haven't talked about any long opportunities on that 2060 because our breadth just doesn't really predicate that. Now, this morning, and when I talk about the breadth, I'm talking about the scanner. This morning, we're seeing, basically all the speedometers on the breadth odometers positive. Now, that's not reflecting the stocks opening that are the internals that this thing is comprised of. So you're going to have to wait a little bit, let the stocks open, let the instruments recalibrate themselves and give you some more realistic numbers based on the futures being down overnight. I mean, the stocks, you don't know where they're at right now, a lot of them. And for sure, this algorithm doesn't know where they're at because they're not printing yet. So wait till that happens, and then we're going to get a bearing on what we can do around this 2085 area. In my opinion, we're in the middle of a fair auction, pretty much smack dab in the middle of the long term here. We're coming down overnight, 15, 18 points right into an area that's a big inflection point. And to be honest with you, we're going to have to wait and see what the breath says before we start making some stances about this, and that'll be after this show gets off the air. So, what do you do? I'm again a bigger fan of not taking longs here. I'd love to see this thing kind of pierce 2085.50 and then come back and kind of retest it, and that's just going to have to be sitting patient. Again, you might say, well, God, what happened yesterday is I got chopped up around 2085.50. Well, you're just going to have to wait and see. I mean, there's no guarantees in trading, and all we're trying to do is use major battle point areas to try to pick battles. If you guys get hold of Juan, I'd really love to know it, because I'd love to bring him in on some of the talks we're doing today. So we'll wait patiently, see if Al can get up with him. Al's super busy this morning. The 10-year, obviously the U.S. dollar, the 10-year, these are reactive situations relative to that Chinese news. So the market's coming off, stock market, the Chinese news. Again, the bonds, I think, the notes are just kind of proving themselves to want to rally if the market comes off, and at bare minimum goes sideways if the market rallies. And that's kind of been the action. This is the weekly. We're back above that important area, 127.11, 127.14, the weekly and the daily. I've talked about not getting short this product at bare minimum. And now, in my opinion, you could start placing some longs again. Stops below 127.11. Give yourself a little bit of noise down there. I think the market in general is going to come off, so I'm a bigger fan of selling below that 2085 area and then getting long notes. I mean, I'm ignoring all the bull that comes from the Fed. They haven't done anything. This economy, the numbers, cook the books, however way you want to look at it, they've done absolutely nothing. And we're setting up, in my opinion, for a market sell-off, which will probably spike these treasuries up. So that's the way I'm looking at this, and just, in my opinion, no other way to look at it. Let's take a look at the NASDAQ really quick. All right, so NASDAQ was a little bit heavier yesterday. We crossed the border. That was a stop out situation in my book. Now we're back below. You can still look at 45.60 as the fence, the Maginot line to lean against right there. The Maginot line to lean against on the short side, 45.60 on the NASDAQ futures. Dollar, interestingly enough, is for some reason not rallying right now. I don't understand that. Here's the 240s on the dollar. We talked about waiting patiently until some inflection points were hit. That short-term inflection point now in the 240s has been surpassed. We talked about not selling this. This was a target-rich environment on the daily on the dollar. We're just kind of sitting tight. You got huge support at 96.10, 96.11, and you've got a really decent opportunity even higher than that, 96.70. So again, 96.70 down to 96.10, I think is a collection area for the U.S. dollar on the north side. I got a small request here for December corn. We're going to take a look at it. Here's December corn on the weekly. We're below a profile here. It appeared way above. That's generally bearish. I haven't been bullish on corn at all. Here's the breakdown that happened. 414. Now, we've kind of come down here. We talked about, when is the trade-off when we have a new hint of a profile appearing. That happened on July 31st, and we hadn't really had any reasons to get short since then. And this particular level yesterday around 392.5. Excuse me, I can't see this morning. We've been breached. We've closed above. What do you do with it now? Guys, I'm not a big fan of going long these grains. Technically, on an intermediate basis, you've got an inflection point 392.5 up into 417.5, that general area. I consider that no man's land. We could move, up into 417.5. That would be a selling point again to me. But anytime we get back down below 392.5, I'd like to be a seller of corn, even though this looks relatively attractive right now on the long side and on the intermediate. If I was going to look at this on the long side, I'd want to see a couple more cars, as Tom would like to say it, be built above this profile. Then I'd feel much better. This could just be a knee-jerk reaction up. And if we get back into the balanced area, I'm going to feel much better about going short this. I'm not, not a big fan of going long grains. And that's just the way I'm looking at it. Is Juan on with us now? Juan, are you there? Is Juan on with us now? Juan, are you there?
Yes, I'm here.
Hey, buddy, how are you?
Hold on.
Yeah, you might need to turn off your
You have an
background
echo.
there. Hold on. Yeah, you might. Can you?
You have an echo.
Are we good?
Hold on.
Okay. Okay, well, while we're waiting for Juan, we're going to do this. We're going to take a look at gold really quick here. This is something else reactive against the yuan, or Ruan in China. We talked about 11, 11, 11, 12. This is our daily situation. We overshot it. We reached a high of 11.19. So, again, gold's a little noisy. If you got stopped out, you can get back in the water. I think, again, stops above 11.12 based on your appetite for risk. We got that rally we were looking for. And I think your targets initially are 1081 down below. I think this was more of just an immediate reaction move in gold. It's not anything I'm concerned about making a huge breakout. Okay, Juan, they're going to get you back during break is what they said. So that's the situation on gold, in my opinion. You do have a new box attempting to appear, a new profile appear on the long-term weekly. That would be, somewhat supportive, or at least, time to take off the long-term short trade for a little bit. But again, I think you've got decent resistance points at around 11.12 again. We're trading 11.06 right now on gold. All right, Juan, are you back? Hello? All right, we're going to move on. When Juan gets with us, just let me know. As we look at, the treasuries, the U.S. stock market, the futures, we're going to wait for the breath to come out. We're going to have to reference some of the things that even with the dollar staying flat, this Japanese yen, man, I hate to fall in love with this trade. It's very, very dangerous, but I just don't see this thing. It's just showing its hand. We're more than likely going to race past 126 with this. Again, I think you can actually change your stops from 123.39 now up to right slightly below 123.68. So, why is that the case? We've been able to kind of move profiles up along the way with this particular yen trade, getting devalued. And why is that the case? Because our profiles keep edging higher on the 240s. Now you've got this new profile that attempted to appear. We talked about, day before, okay, we've got a moment here that we are creating a new profile that may be time to take things off for a bit. We looked at this yesterday. That's not resistance. That's not a selling opportunity. We wait for breakouts. Now it's, in my opinion, it's time to get back in the game if you did take anything off based on that. And again, we could have dived right back into 123.68, which you would have been able to trade it much lower. But right now it's just showing itself as a very strong currency relative to the dollar. Let's take a look at the Australian dollar, which is obviously not happy about this right now. 73.45. We're getting back down below. That's going to be resistance now on the Australian dollar. We almost got to that maximum area to sell above before this happened, 74.62, 63. This is a decade type move in the Yuan. This doesn't happen that often. Here's the long term on the Australian dollar. No really signs at all. I can't believe this thing's devalued as it is. When I was in Australia last time, it was 108 per dollar, which was not a lovely situation for me when I was traveling. I'm laughing now, but I was kind of crying at that point. Crude oil, we talked about this one. It's not time to take this short trade off. Still, it's unbelievable. But, no signs. Here's our daily, our weekly similar situation. Here's our 240. We barely breached this today. We talked about selling opportunities around 45. That was actually hit yesterday. You got to give yourself a little bit of noise on crude oil. So, 50 cents is nothing on a crude oil short stop factor. We'll be right back, guys. Hopefully we'll have one.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
guys, welcome back to the show. Juan, do we have you now? Juan, hello?
I'm here. Can you hear me?
Yeah. Have you got a delay or can you hear me real
Yes.
time?
Can you hear me?
Okay. Yeah. I think we got a delay on the little technical issue here with Juan, possibly. But thanks for being with us. Tell you what, we're gonna.
Yeah, we have a delay here. I think we have to fix this.
Let's try
Anyway.
tomorrow. Let's try tomorrow, if that's cool with you. All right, I'm going to hit silver really quick, guys. Silver, just a little, green shoots here on the daily, getting past 1478. And what we're doing on silver is actually, to me, that was a resistance area of 1478. But now you got even some more overhanging situations you got to pay attention to. I think the targets up top, if you guys are trading long breakouts on silver, 1585. I haven't been a proponent of going long silver in a long time, put it that way. But I think, if you guys are looking for a riper short opportunity, if you got stopped out of the first one on the daily for highs, you've got 1585 sitting up there on silver. Let's take a look at Apple really quick. This is what I was just doing some writing about. Pre-market 1785 here, but what is this? So I changed my daily here. That's weird. Anyway, the situation on Apple, we always talk about letting the profiles downstream regulate the long-term trade. So again, what the premise is here, it was kind of the polar opposite of what happened before, which is what's happening now. So as you can see, we had kind of a sea change event on Apple back in August, September of 2013. We broke above profiles. We crossed above zero on our navigator. That hadn't happened in a while. And then we started taking the attitude, blah, blah, blah. So now you've had a divergence in higher price action in the price of Apple relative to divergence going on in Apple and our navigator. Now, what does that mean? That means that you need to look at any type of breakouts up top as, probably not valid breakouts, and you're looking to sell breakdowns. And that's what's happened on a long-term basis here. Now you got navigator sitting on the cliff of crossing below the zero line at the same time. You've had that pullback, breakdown. You got a kind of a DMZ, if you will, 122.73 to 124.70 as maximum resistance. But you come up into yesterday, this particular bottom of the profile at 120.37. All right, we reached a high yesterday of, let's just call it 120, rounded off. So, now we're down a couple of points off of that. You got your 240 sitting here on Apple. That was very similar situation on the resistance areas. And I think you just are more than likely going to have to trade this from the short side for a while. Initial stops above 120.37 and really all-time maximum big-time stops above 124.70 on Apple. Had a couple of questions about that one. All right. Let's take a look at the euro. This is one that's pissed me off a little bit here. Gotten back above the nerve-wracking little line here that I'm using as the fence for myself, 109.50. We got a little bit too high for me on that one. And again, I'm not in this trade anymore. We could move higher. I want to see this back down below 109.50. That's kind of trading. Sometimes you lose two or three in a row, and then you get the big winner. So that's kind of the way I'm looking at this and able to sleep at night. We'll be back again tomorrow, guys. Sorry for the delay this morning. Stay tuned for Larry.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.